right. Welcome back. Episode 7 of Pickers Market. We are officially live on Spotify and Apple
Wow, look at
Podcast.
us. We're
So like
we're,
and
we're
subscribe.
are we real now?
We
Are we
are.
real? I look
think so.
sunburnt, Tyler. When this goes up on YouTube, I look like I've been at the beach all day. It's gonna be lovely.
Yeah. Makes you look tanner than you are.
Well, yes, exactly
is that what
right.
you're saying? Sweet. So yeah, episode 7. We don't have a guest this time.
No guest, just
guest.
you and I holding
know.
down the fort.
Been a while.
I think Gangle got offended by
I
my
know.
Cato Kalen couch surfing approach.
Well, and then on top of that, this morning he goes, "Am I on the podcast?" I was like, "No." He's like, "Oh, okay."
Insert sad music here.
Yeah. So as much as I think he actually enjoys being on the podcast.
Yeah.
But
well, you know him. He can't be happy about anything.
So I think he was a little disappointed.
Well, we got to give one shout out is that his kids' team made state.
They did.
Yeah. So he got to watch that yesterday, which is awesome.
Who knew Elk River was a tennis powerhouse?
Right. Exactly. I wouldn't think of that. No. Right. I'd be like hunting club. You guys nailed it. But tennis, no, they're solid in tennis. Apparently.
I feel like they've gone since his son's been on the team. I feel like pretty sure they've gotten to state every year.
I know they've really competed for it every time. I'm not sure if they made it every time, but yeah, they've always been competitive. So that's fun. Yeah. We never were in my school. So
I couldn't tell you about our team's tennis or our school's tennis. I truly have no idea if we were good or not.
Gotcha.
But anyways, how was Memorial Day?
Memorial Day was.
Did you relax?
Yeah. For the most part, I did. I was somewhat of an idiot. I had there was an area that I was digging out in my house, and I ended up putting rocks in there, and that was the next day. Did not feel so hot. Rocks are heavy. If you take anything away from this podcast, know that rocks are heavy. That was challenging, but then outside of that, yeah, I just chilled. I didn't do much outside of that. So that was my goal, and I accomplished that mission.
Good. We ended up doing projects.
Okay. Did you get your deck? Are your stairs level now?
Well, so my wife started working again after both kids. So she worked on Saturday, so I didn't really have a chance to do it back then. And then Sunday we decided to just, do more family time. And then Monday she worked again, and it was raining. So it was kind of like you didn't get a whole lot to work on the deck. So I ended up doing some stuff in the house, like wrapping up some of the projects that we had done, and then did some more kind of like old school board and batten type stuff in our entryway and whatnot. So it was a weekend of
with kids in tow. You did this? Wow, look at you, just multitasking.
Had my 2-year-old helping me paint. So that was interesting.
Did he get more on his face or the wall?
He was actually pretty good. I tried to keep, because I was letting him use like actual paint.
Yeah.
So I tried to keep the amount of paint on his paintbrush to a very, very minimal amount.
Gotcha. Yeah.
And then had tarps down.
As little damage as possible on that.
But yeah, it was good. It was fun.
You didn't give him the water trick where you just give him a bucket of water and be like, paint the wall all you want.
In our basement, because our basement is all concrete because it's not finished.
Yep.
And so we would just give him a massive bucket and then say, do whatever you want.
Graffiti it up, man.
Yeah. And he loves that. So we did that. But we had to be upstairs for me to do it. And it was just because my wife was working. So it was just me, the 2-year-old and our 8-month-old. So we had the 8-month-old kind of in his bouncer thing, and then he was helping me paint a little bit. So
nice.
It was an interesting experiment.
Hey,
but it was fun.
The fact that you got anything done as a result of that is a win. So good job.
Take it. So moving away from that, I think my hot button topic for this week is, we're starting to, at least I'm starting to get questions about, allocations towards, their a client's overall portfolio. How do they invest?
Mm-hmm.
And one thing that I think I'm hearing a lot about is, well, I want to have some cash on the sidelines just in case there's a market correction.
Yep.
So markets are what I would say generally at an all-time high, right? We're not at like peak. We're not setting, because
we're right near it.
The last week or so, the market has pulled back a little bit. But the S&P is near all-time highs. Dow Jones is near all-time highs. And then even if you start to look internationally, you've got Canada, Brazil, Mexico, UK, Germany, France, general Europe stock index, and Japan that are all at basically all-time highs.
Gotcha.
So I'm curious your thoughts on, do you invest at all-time highs, or do you keep something on the sidelines? Like, what is your thought on all-time high markets?
Yeah. I mean, the general thought is yes, because I have a very simple theory about this. We have to break all-time highs to keep growing, right? It's just, we have to do it.
Yeah.
Otherwise, we're just stagnant, right? And markets over longer periods of time are very rarely stagnant, right? So we are very frequently at all-time highs. So you have to invest in those times, even if it feels a little uncomfortable.
Mm-hmm.
The difference in this one right now, and this is still, I would invest in all-time highs. Don't get me wrong. It's not like I'm selling all my stocks. The difference is right now, the penalty of having some cash on the sidelines isn't as severe as it was for the better part of 10 years before, right?
Sure.
Is that the money that you're making from having conservative investments is still 4, 5, 6%, depending on what you're investing in. And, I'm talking mostly bonds here at this point. But from that perspective, you don't, the long-term average return of the market is 8 to 10, right? So you're not giving up what you used to be before, right? The Tina principle.
Yeah.
There's no alternative where you either invest in the market or you get zero. It's not the case anymore. So from that side, there is an argument to be made to at least having some dry powder. But would I be selling everything in order to find the next, until we fall into all, until we fall into a value area or a correction area again? Absolutely not. You have to invest through all-time highs. It's the way, the markets just progress up and to the right over time. It's not linear. It's not always, but over time, that's the way you grow, is that you grow from all-time highs and you create new ones, then you fall back, and then you create new ones and you go further up. It's just the way the markets go. So you can't use all-time highs as an excuse not to invest. But you can have some cash on the sidelines right now without as severe as penalty as you used to pay in the past.
I mean, investing is a highly emotional thing,
It
right?
is.
You're putting your hard-earned money and kind of risking it, if you will. And what I always hear is, well, if I invest today, then tomorrow's going to be 2008.
Yeah, it's going to fall.
Right.
Yeah.
Like that's always
I was the top. Yep.
Yeah. I was the last buyer, and now, I have to make my 20% back or whatever. Or, compounding. So if you're down 20%, you have to make more than 20%, obviously, to get back to even. So I think that's the fear. But what I thought was interesting was RBC put out a study, and they go all the way back to 1950 for this. And so what they show is that if you invested only on the days of all-time highs, your annualized return over 3 years, going back to 1950, would be 10.9%.
Okay.
If you invested on every other day besides all-time highs, your 3-year annualized return was 11.5%.
Okay.
So it's really not that different.
Right.
Yes, you're giving up 60 basis points per year, but that's, in the grand scheme of things, that's not a lot.
Yeah.
So the fear of investing at the all-time highs is interesting to me, because that's all you ever hear about is, well, I don't want to do it right now. I want to wait for a correction or a pullback in the market. But this study shows that it really doesn't matter. Yeah.
And waiting for it always makes me laugh to a certain extent, because it's one of the easiest things to say and one of the hardest things to do, right? Because if you're waiting for a correction, guess what? It corrects because things look bad.
Yeah.
And things don't feel good.
Right.
And that's the time you probably need to be more aggressive. The people that can do that are actually few and far between, that can actually say, I'm willing to stomach this pain, because it's probably going to get worse. You're probably not going to pick the absolute bottom. So you're going to be, even if you're buying in a correction, you're probably going to feel, I bought falling knife, right? Cut a finger off. There goes that. So I always hesitate to do it. I mean, again, our basic mantra is time in the market, not timing the market, right? I mean, this means investing at all-time highs too, because we're frequently there. And as you said, you have the old adages and all that stuff, but when you look at data, you don't really lose a lot by investing at current levels right now. And the opportunity, and again, it's your time frame, right? If you set yourself up for the next couple of years and understanding that the market could have difficult times, but you can weather the storm because you have safe assets or you have other things that you can draw from, then you'd probably be fine over a longer period of time anyway.
I mean, even for me, like that gets emotional. Like I always think back to 2020 because that was a perfect example of the market just falling off a cliff.
Yeah.
And even like me trying to rationalize putting money in was difficult because I was like, who knows where this ends?
Yeah.
And trying to force yourself to do it is not a good feeling when the next day you see it down another 2% anyways.
Yeah. Yeah, I mean, exactly right. I mean, and the other part about that is, again, bull markets tend to be the escalator and then the elevator shaft for bear markets, right? Is that they last 11 months, but it's like a 30% decline during those periods of time. So it's super fast and it's super painful. And you feel like there's no bottom.
Yeah.
It's happened multiple times. It'll happen again. You got to weather those storms, but you got to remember that more often than not, even when investing at all-time highs, more often than not, you're probably going to grind higher. Right. I mean, the odds are in your favor if you kind of continue on that as your thought.
Well, and it's interesting because like every year we get a correction of some percentage or another, right? It's just
usually a couple of 5%ers. Yeah.
Right. 5% is probably what I would call the bare minimum.
Yeah.
And probably 10% is more around the average that we get. So, I mean, we've had one this year and we've worked our way back up to all-time highs again.
Yep.
So, I mean, I guess on your opinion, is there something else coming or is there is the economic data, the earnings season that we just got through, is that kind of green shoots like we talked about with M&A and IPOs a few weeks ago, or is there still something that, another shoe to drop, if you will?
Well, on a correction side, I mean, it really doesn't need a reason. People look for reasons all the time. I often think they're looking, just trying to justify a reason. Sometimes people just get over their skis and they just decide to pull back and the market has a 5% correction, right? Those can happen at any point. Whether that is economically or earnings based at this point right now, I think your probably closest thing for that is a raise of inflation, right? Which I don't necessarily see. I think we could be stuck in the mud here for a while and just kind of stay where we are.
Yeah.
But to go, we've had 9.1, we went down to 3.4. Could we see 3.5, 3.6, 3.7 again? Sure. Could we see 5, 6, and 7 again? I have a hard time with that. That's a different story. That's something we wouldn't see. And I think that would be a catalyst for saying, okay, the markets are going to be in the toilet here for a while because now we've got to re-raise interest rates. We got to reset all of our thinking.
Yeah.
Those are the kinds of things that, it's a simple adage I have is that it's usually not the punch you see that knocks you out, right? It's not the one you're preparing for. It's the one that comes from the side. So from those are the things I always think about more frequently. It's like, what are the things that can drive that the other way? Because that's where you get your 2020 events, right? 2020 COVID, 2008, you had the housing crisis. Now people kind of saw it a little bit, but I don't think they saw the amount of economic calamity that would come as a result of that. I think we just got, people didn't realize that, being massively over levered can have a pretty severe consequence in the economy. We're a little smarter now, hopefully, at least about that.
Yeah. I'm sure there's other things out there.
And that's absolutely, there will be something down the road that we won't see coming that will have a dramatically negative impact. But a 5% correction, often that can just be technical trading and that kind of stuff where it doesn't really have a lot of basis. People look for reasons after the fact. But right now, based upon what we see, I don't see a dramatic catalyst for that outside of, again, a reacceleration of inflation and that would be my closest one that I could think of.
Got it. Switching gears, nerding out. T+1 settlement is officially here.
You really went nerdy.
I know. It's kind of a boring subject, but I thought it was interesting because in the what I would call the day and age of real-time transactions with crypto, that traditional markets, stock and bond markets, are now T+1.
Do you think the average person even knows what settlement is? Maybe they do. I don't know. That, because once you enter a trade, let's say you go into your retail account and you enter a trade in, like, I'm assuming they just think it's done.
Yeah.
Right.
But basically what it is you have to have the cash in your account by the settlement date.
That's a good point.
So you can buy something today and not have the cash for it.
Yeah.
But then in the T+2 world, if you bought it today on Wednesday, you'd have to have cash in your account by Friday for it to set before it settles.
Yeah. That makes more sense because if a person does it and they don't have the cash, they're going to know what settlement is real quick.
Yeah. But I think for most retail traders, they already have the cash in their account anyways. So it's probably not a big deal. But that's where, like, if you're day trading and you're constantly buying and selling something, all of a sudden you've used up all of your available cash, regardless if you have the money in the account. All of a sudden you have nothing in your account that is technically settled.
Yeah.
You can't trade anymore.
Right.
So I guess if you're a heavy trader, you probably know what it is. But I just think it's interesting that in a world where cryptocurrencies settle real time, that we're still in T+1.
Yeah.
At this point.
Yeah. And we just moved off T2.
Just moved off of T+2.
Yeah. Part of it is old school regulation, right? It's just we have to go through so many more massive hoops. When you're creating something new, you can kind of create it in any way, shape, or form you want. Now you have 100 years of built up rules, right? And built up adjustments and historical technology and all these people who are used to doing it one particular way. It's significantly harder to change. I mean, I think that's, putting this to business to a certain extent, that's why people go out of business, right? Is that if they're not adaptable to it or not willing to take the pain of sometimes cutting off their own arm to then regrow their business in a different way, that can go away. In this one, you're not, right? Because the regulators run who's going to do what. But technological change in that, because of that lack of going away factor, probably even slows it down further.
Well, and I remember back in 2017, so I was generally newer to the business in 2017 still, and we were switching from T+3 to T+2. So trade day +3 to trade day +2. And I felt like it was a lot bigger deal back in 2017 than it is now.
Yeah.
Going from T+2 to T+1, because like everybody, at least in the world that I was in, I was more on the financial advisory side at the time. Like all of the financial advisors were paying attention to it and were happy about it.
Yeah.
Whereas maybe this is just the world that I'm in now, where it's not as like advisory and, but I really don't hear anybody talking about T+2 to T+1.
Yeah. Well, I wonder because, I mean, again, for old people like me, 2017 wasn't that long ago. When I hear that, and I'm like thinking it's 7 years ago, my mental math was like, wow, craziness. That's maybe, T3 to T2 ended up being a lot of consternation about really not that big a deal.
Yeah.
And I think technology has improved so much that everybody, as you said at the beginning, is used to kind of an instant, right?
Yeah.
And so the fact that we're still not instant here right now, and even not after this, we won't be instant.
Yeah.
I think people are just like, well, we went through this before. Nothing happened. The Y2K thing, right? How everybody went absolutely nuts about that. And it ended up being not that big of a deal. So the next iteration of what that may be probably is less of a big deal. I think that's maybe what we're dealing with here. And yeah, just the fact that I think technology has moved so far, so fast that I think people are like, this is probably overdue. And checks and balances are in place. The last one wasn't too bad. I think we'll be okay. And I do think we'll be okay.
Do you think we'll ever go to a like real-time settlement, or is there too many? Because I think the big thing that people are worried about is for bigger institutions or international institutions who trade in U.S. stocks, who need to switch their currency into U.S. dollars to then buy something. Like for them to be able to do instant settlement, I think would be a challenge. So is there a world in which we ever get to real-time settlement like cryptos?
Digital, with digital currency, digital digital dollars, digital other currencies. I think that's possible. I think it's a very long way out.
Okay.
I think they will take their time. I don't think they're in any particular rush to do this. I mean, obviously it was 7 years before they added another day, right?
Yeah.
I don't think they're in any particular rush to do so. And here, like, part of me wonders, like, what the value add for real-time settlement is in a T1 world. In a T2, you've got cash delay and all that stuff that can kind of bog down
you
the
have
system.
financial system risk is what they call it, which is why they keep trying to shorten
as much as possible. Real time would be great, but yeah, I think the technology to implement that can't be our current system. It has to be something else, and maybe crypto shows us the way in that. I think digital currency will accelerate that process, but I don't think regulators will be in any way, shape, or form in a rush for that.
Maybe if like the US dollar goes to a cryptocurrency instead.
Yeah, the offering of a US dollar.
Because, they're kind of going down that path, which I don't want to get into today.
Right.
That could be a whole nother nerding out segment. But we're kind of going in the path of having a central digital currency, right? I wouldn't call it a cryptocurrency.
Right.
Or I guess you call it cryptocurrency, but it's not decentralized, right? The Fed and the Treasury are going to run this digital currency.
Yeah, a centralized digital alternative, right? I mean, if you're carrying, Gangle carries $20 wherever he goes, right, or 100, whatever he carries. I don't know. We don't carry.
He's
cash.
Old school. I bet he carries a lot more than that.
Whatever. Yeah, exactly. The wallet. He's probably got that Costanza wallet that doesn't bend. But from his, that's not going away, right? Physical dollars are not ever going away in our life, even our lifetime.
Yeah.
You're much younger than me. Yeah, I would say even
but I mean,
in your
I don't
lifetime.
carry cash.
I don't carry cash either. But what I'm saying is that it's when we say that we're building a digital currency, it doesn't mean that part of the currency, the physical currency, is going away.
Right.
It's going to be an alternative solution for the institutional transactions that can happen faster as a result. So I think that's where your alternative will come into play. I think you'll see business to business using that a lot more initially. And then eventually financial institutions will get to it. Financial institutions just tend to be the last player at the game. They are so heavily regulated and so risk averse. They're not going to be through the front door on that.
Yeah, that makes sense. So the other thing that surprised me, and this has kind of been a long time coming, I think, after COVID, but what surprised me was last year, U.S. imports more goods from Mexico than they did China. Mexico is now our number one importer.
Okay.
Which was very surprising to me, or I guess I should say it shouldn't have been surprising to me, but it was.
Yeah.
So
it surprises me, honestly, too.
Out of all of our imports, 16% comes from Mexico and 15% comes from China. It used to be significantly different. We used to get about 20-25% of our imports from China, just because that was where everybody was based.
Yeah.
But then post-COVID, there was a pretty big shift from that because obviously you couldn't get anything from China.
Right.
And so now I think it's, companies are diversifying their manufacturing and where they can source products from. And you've heard a lot about nearshoring or onshoring. Obviously, Mexico is a perfect spot for the nearshoring.
Yep.
Because I think onshoring here in the U.S., it's going to be much more expensive. Labor is a lot more expensive.
Oh, yeah.
Regulations about labor
building
is probably a lot higher.
Yep.
So there's a lot more costs that go into onshoring here in the U.S., but Mexico is a little bit different. Nearshoring, a little bit cheaper labor, probably not as high standard on overall labor conditions.
Yeah.
So I think you're starting to see more of that than you are onshoring. And so I think that's where the 16% is coming from.
Did you, it surprises me still to the, just given the size and scale, right? Is that China so big, Mexico, not quite, right? As big. So even after that, I would be interested to see through the data, like what shifted, was it product by product, or did they become really good at a couple of different things and we started buying more of that stuff?
I would one data point that I would use is autos.
Okay.
I think a lot of companies have been using Mexico, and obviously post-COVID, there was a pretty big demand for cars, and I think that was part of it.
Yep.
So maybe that shifts as the what you could call a super cycle in car buying slows down a little bit.
Based upon used prices, that cycle is it's coming to an end here fast.
So I think maybe if that continues, but I guess the other side of that is there's still tariffs on a lot of Chinese goods.
Yeah.
And I believe the Biden administration just announced additional tariffs a couple weeks ago.
Yeah, I think it was on autos too, wasn't it?
I think, well, yeah, specifically,
Yeah.
some of their EV.
Yeah. Yep.
So, I guess you could take both sides of that and say, well, autos could be in a decelerating environment, so maybe Mexico doesn't import as many, but then more people are nearshoring into Mexico, not just autos, so maybe that continues.
Yeah, I think it does. I think it, whether the magnitude and whether it flip-flops between who's leading, but I think if you take a 10 to 15 year trajectory on it, I think nearshoring just makes more sense.
Yeah.
From the perspective of especially where, the difference in political environment and geopolitics. Now again, that can be disrupted anywhere. But also the fact that once you build that infrastructure and you realize, okay, yeah, it was a heavy CapEx cost to get involved in there, but now that I'm involved in there, I can build it a rail. It's much quicker.
Yeah.
I don't have to go through some difficult areas. I don't have to deal with all the tariffs and all the other stuff. They're kind of incentivizing me to do this. Once you kind of go over that, I think you start to get more and more comfortable with it.
Yeah.
And I think as long as they can build out the expertise, and whether that's more of Central America because it is connected via land, I think that's an avenue where I think that does continue. It'll be dependent upon their ability to specialize in things, and also not only to specialize, but also to broaden out their scope of things that they do well.
Well, we also didn't really start hearing about onshore or nearshoring until maybe mid 2021.
Yeah.
So, I mean, you start thinking about project planning, actual building, and then ramping up production. We're really only 2 to 2.5 years out from when they first started talking about that.
Yeah, and it really was on pause at the initial part, right? Because COVID, right? You had all the COVID constraints, you had all the things that you couldn't do.
Yeah.
We're probably only in, if we truly are in a reshoring, nearshoring, onboarding world, whatever you want to call it. Yeah, the O-rings. if we're O-ring closer than we were before, this is probably early innings for that.
Yeah.
The question is how far does it go? And I don't know. I think probably outsourcing probably got over its skis a little bit, and the effect of we stopped doing a lot of things that now we're starting to say are probably essential to our survival longer periods of time. Understanding how to manufacture and leading that, and having actual physical plants and those kinds of things is probably a value for us. And I think we're realizing that to a certain extent. So I think, globalization kind of got a little bit overdone, and now we're kind of maybe either rationalizing. Whether we rationalize and then go back into further, I don't know. That's the big question. But I think the trend that is what we're seeing right now probably does continue for a while.
Yeah. Well, and maybe you get that home bias for, and same thing with markets, right? You overcorrect one way, mean reversion.
Always.
Right. And the markets don't necessarily just mean revert, they
usually overshoot. Right. Both ways.
So I think that could be the same trend here, where we overshoot to kind of coming back with the home bias and try to get away from this globalization. And then all of a sudden it's like, well, shoot, we should probably have a little bit wider net here to give us some diversification.
Yeah. I mean, well, and the politicians have been talking about this forever, right? But there wasn't actually a lot of action because there wasn't a lot of economic incentive to do it, right? Companies follow economic incentives. At the end of the day, they will, right? And so you can talk about it all you want about we're losing jobs overseas and all that stuff. Well, the labor arbitrage and everything else was just made it viable for them to do so. I don't think they're waving the red, white, and blue flag because of it. I think there's just better economic incentives for them to doing it now. There's challenges. I mean, China's labor is not as cheap as it used to be. They're changing the things that they want to do and the restrictions they're going to put upon you for doing those kinds of things, to where there's more of an economic incentive to do it on our side now.
Yeah, I think that's a good point. There's so much uncertainty on Chinese regulation.
Yeah. Just business risk.
Yeah.
They can shut down a plant on you in immediate, and you don't have any other sourcing material.
They can come raid your office building whenever they feel like it.
Yeah.
So I think that's a good point, because it, a lot of people forget about, well, yeah, it's cheap, but at what risk?
Yeah, exactly. Yep. You have to remember that cheap comes with its own cost too. And sometimes it's not easily identified. I think COVID and all the other stuff that has made people identify those softer risks a little bit more. And so there is an incentive to do it over here as well.
Sure.
Which is great.
Yeah. All right. Enough of the boring stuff. So over the weekend, I did get to relax a little bit.
Nice.
But I was thinking about this. So my console right now so I have an Xbox. I'm not sure what version it is at this point, but it's getting old.
Okay.
It's probably like 10 years old at this
point. Are you on the current console?
No.
Okay.
I don't play enough to justify it, but I was thinking about it. If I would ever go back to PlayStation, because my first official console that I got for a Christmas present was the PlayStation 2.
Okay.
And then I switched over to Xbox because that's what all my friends had, and they had Xbox Live and
Got it.
playing online.
Yep.
And, PlayStation didn't have the capabilities with Xbox at the time. Now you do. But I loved my PlayStation. I'm not a big fan of the Xbox.
Okay.
So I was thinking if I ever got one, would I go back? But what I'm curious about is what was your first, because mine was the PlayStation 2 and that was like the bee's knees.
Yeah.
So I'm curious what
my original purchased console was. Now we were talking about not money I had to throw out, but just what did I have first, right? Okay. So I had an original Nintendo when that first came out. I think it came out in the early to mid 80s. And I had one. And that thing was, you want to say bee's knees. That was a different ball game. So we had an Atari in the house, but that was like clunky and it was weird and all that, the little stick figures running around and all that stuff. Nintendo, the jump from Atari to Nintendo is probably the biggest jump because people looked like people, things looked like things to a certain extent, right? We played Excite Bike, and the motorcycle, you could actually see what that motorcycle was, as opposed to the old systems where it was just these.
What wasn't a few dashes?
Yeah, exactly right. Yeah, these square blocks for tires and those kinds of things. So I had one of those, and I was a crack addict for it. I mean, I played it constantly. I evolved that. I probably ended at the PS. Well, I do own a PS4.
You do?
Yeah, it was a total just like, I'll give it a shot purchase. I'm too old now, Tyler. My reaction times just aren't so good anymore. There's too many buttons because I used to be a Madden junkie. I used to play it all the time. I would destroy my roommates in college in Madden. I was one of the better ones. I am no longer anywhere near. I don't understand the game anymore. It's just too many things at once.
Madden, there's a lot of things you can do.
It's just, and I was like, how I end up spinning in the in the line because that's the only button I know. I was like, I guess I'm gonna roll out the spin again. So I've just gotten too old for it. So the PS5 was not a consideration for me. So I've kind of retired from that. But my legacy went from original Nintendo all the way to PS4. I had some type of console in my house that was used fairly frequently.
See, that's one thing. As I'm getting older and have more responsibilities and I don't have time to play, is when I do fire it up, my go-to game was always Call of Duty.
Okay.
And kind of still is. But when I get on there now, people are so serious about it.
Yeah.
You've got live streamers who are and now the game has been around for years and years, and people are getting so good.
Yeah.
That for the casual player who might log on one time a week for an hour and a half is just not enjoyable anymore. And
you're just dead in like 2 minutes.
It makes me so sad because that's the game that we played growing up, all of us online at each other's house, have 4 people on a screen. You could see exactly where the other person was.
Yeah. So your indoctrination into consoles though was always online, community based, right?
No. So PlayStation 2 didn't.
Okay.
So what we would do is you'd have a TV, you'd have 4 controllers, and one person was in the top left, top right, bottom right, bottom left. And you could see exactly where the other person was, but that was you would play a team deathmatch, whatever, against each other and just kind of have some fun. But then about probably 3 or 4 years into the first console I had, that's when live community play became available, and that just took off, and you didn't have to go to your friend's house to play with each other anymore.
Yeah, that was, so it's funny because I have played maybe 5 online games in my life, amongst other people that I didn't know.
Mm-hmm.
My whole thing was, you had a friend over, you'd play together in certain regards. You'd have tournaments where you'd come over. We did that with NHL 94 was constant on that.
Solid.
Yeah, that was a great one. I know nothing about hockey, but I was pretty good at that game because I was.
Is that the one where you could shoot it from the red line over the goalie's head?
No,
Okay.
This is the one where you had one particular move, like a double deke move kind of, and it never could be stopped. And people used to get so mad. I mean, that's where handles got thrown, and they were wired handles too. So you couldn't really get them across the room at somebody.
It would pull the console
exactly. Pull the console, game would get reset and all that because people get mad about using that move. So that move, but that's also the one where you could fight, and they hadn't. I think they brought fighting back, or I can't remember how it was because they took it away for a bit, massive revolt, and then they brought it back. So there was that aspect too. But you could also hit people after the. Somebody scored a goal, you could hit them afterwards. And so the minute you scored a goal, then it's just free for all. So that caused, more arguments and fights, but it was always in person. So by the time I was fading out. So I just never got into the online community thing. It just wasn't my jam. Like I did it a couple times. I'm like, I kind of hate this. Because I was used to it with friends and just having a good time doing that. And my friend community by that point, none of those guys, none of my guys are going to go online. My friends aren't that kind of guys.
Well, most of my friends are now pretty much done playing.
Yeah.
Right. the occasional login is that you get, and all of our consoles are
the Call of Duty reunion jam. Is that what
and
you get every now
all
and
of our consoles are the older version.
Gotcha.
Right. No one has gone out to buy a new one yet, just because it's not.
I wonder if they should do like a classic online community where if you've spent a certain amount of time on, you're no longer allowed. You have to go. It's like you have to pass a dumb test to go back down to this level so that people like us can actually have some fun.
Well, and I think one of my favorite things though is I still have a Nintendo 64.
Okay.
So we had a friend that was moving, and they gave it to us back after I'd already gotten the PlayStation. But that is by far and away my favorite thing to play now.
Yeah.
And we'll have friends up to the cabin, and that's on a rainy day, we'll just have a massive tournament of whatever game we want to play, whether it's Mario Kart or
we have a Switch. For my, that was mostly for the kids, but now all 4 of us, Mario Kart's always a jam. Like that's ones that seems the universal to me. Like anybody can just jump into Mario Kart and probably have a pretty good time.
Yeah.
I feel like that's the one game where you can kind of get everybody involved. I think the Wii bowling, the initial like Wii play game, I think that was one too. But Mario Kart just kind of stems the tide. Like you can go. My wife plays. Well, she'll play like Mario games every now and then. But Mario Kart just seems like you could throw anybody in there. Gangle plays Mario Kart.
Smash Bros is a good one.
Ooh, there you go.
But I think my goal with playing video games is to stay sharp enough that when my kids get old enough to think that they can beat me, that I'll still kick their butt. I think that's my end goal with this, is that I'll keep playing enough to stay good enough to always be one step ahead of them.
Yeah, that's always been the sports thing for me, just like the physical sport. And I know that's coming to a quick end for me. But that's always been like, I got to be at least good enough that I can be competitive to my kids. It's like, oh, dad's still got something left in the tank. Yeah.
All right. Enough talk about video games. I just want to wrap up. So I don't get much time to watch shows really.
Yeah.
But I've been rewatching the show Suits.
Suits. Okay.
So I'm curious, what is your favorite go-to, or I should say I'll watch Formula One.
All right.
Not really a TV show.
Yeah.
But curious what your current favorite show is.
Yeah. So really excited by The Bear coming out in the end of June.
I just saw something on that.
Yeah,
it's like season 3.
Season 3 coming out in
I guess
June
I've never
27th.
even heard about it.
Oh, wow. Okay. Okay. Well, we need to have a conversation offline about that, because it's going to be me yelling at you for not watching it. Season 1 and 2 have been wrapped. They go quick. That's a show you can binge in a weekend. So
are they like 30-minute episodes?
I think like 22? Yeah, they're not long. They're not long, and they're 10-episode seasons, so it goes fairly fast. Yeah. So excellent show. Can't wait for that one. The one we've been watching, though, with basketball playoffs, I don't watch a ton.
Yeah.
But when the wife and I hang out now, it's Brooklyn Nine-Nine, which I came to very late.
Okay.
And it is hilarious. It is so funny. So it's Andy Samberg, Brooklyn Cops, if you don't know that one. But it is so funny. So I found out that, it's writers from other shows that I liked a lot.
Yeah.
And I can't believe I'm punching myself, because this show's been around forever and it's got like 8 seasons. And I'm shocked that I never came to it until now, because it is right up my alley for the kind of humor that they have on there. That it is so funny. So I am going through season 1 right now. We're up to season 6. There's 8 seasons. We'll get through the end, and I would assume this will be a continual, like you said with Friends a few weeks ago. Brooklyn Nine-Nine, I can see that being part of, like, I got nothing to watch. I got an hour and a half to kill. I can jump in anywhere. I'll throw this one on. Yeah.
And you can cite the lines.
Yes. Yeah. Well, Seinfeld will always and forever be my most frequently quoted line. There's no way my memory won't hold as much anything else other than Seinfeld lines, because I refuse to get rid of them. But Brooklyn Nine-Nine will have some of those lines. Like, there is a scene, they do all these intro scenes. They're usually like a minute or two long, and they just kind of a quick joke kind of thing.
Yeah.
There's this one where he's got the lineup singing the Backstreet Boys. That is the funniest thing on the planet to me. I've watched it on YouTube probably 50 times. I constantly laugh at it. It is just hilarious. So check out Brooklyn Nine-Nine. I'll send you a couple of clips. That's the one I'm watching the most right now.
All right. Well, that wraps up episode 7.
Cool.
So we'll be back next week.
I'm assuming we'll have a guest next week, right? We'll probably have Cato. Cato will wander his way in here.
We'll give him the sympathy.
Yeah, there you go.
For not having him this week.
Give those sad puppy dog eyes. And we're all right, come on back.
All right. Well, with that, like I said, we're officially on Spotify and Apple Podcasts now, and I think YouTube.
Very, very soon.
Soon to follow.
Yeah. So like and subscribe, people.
All right. Have a good week.
Take care of yourselves.